On the phone, and this is a part of the segment I've been really looking forward to, is Cameron Kusher, who's the RP Data's Senior Research Analyst. Now, Cameron's been a bit of a movie star. He's been all on the national TVs and he's been in the national papers, and we got him here in the room with us talking live. Welcome, Cameron.
G'day, Anthony. Thanks for having me.
Mate, you look great on TV, but we've got your mug shot up for everyone. But tell me about what's happening. Obviously, you broke some big news this week about rents. Just tell me what the basis and what's the background.
Oh, what we found in rents, what we do each quarter is have a look at the rental movements across the capital cities and the major regional areas of the country. And what we found is, to date, there hasn't been a lot of rental growth over the year, only about 2.7% in the capital cities and 2.9% nationally, but we're fully expecting that rental growth is going to start speeding up over the next few months. You look at all the data, we see that first home buyers aren't very active, investors aren't very active, building approvals and commencements are heading in the wrong direction, sales volumes are down, and all that points to more pressure in that rental market. So we're expecting that rental growth will actually be quite strong over the next 12 months and probably beyond that as well.
Now, I have a little prediction, Cameron, that if the current trends continue, we follow the number of buyers in the market. That's actually lifted. We follow the inquiry on the website. That's completely stable. So there's no drop off at all. And there's fewer stock, and that's both sales and rental. That has to end up pushing stuff along, doesn't it? Rents, and also ultimately it'll help maintain the price levels.
Yeah, exactly right. So what we find, we have had that problem over really all year that, and even late last year, that listings are at quite elevated levels. Now they're still well above average, but we're not seeing that the bulk of new listings is continuing to grow. So hopefully over the next few months we'll start to see some of that stock excess absorbed. Or people take their properties off the market and we get back to an equilibrium, and that will encourage more people, I think, to go out there and have some activity in the marketplace.
So Cameron, with the number of properties, the transaction numbers dropping so dramatically, 10 to 20%, I think, or 16% in Adelaide?
We've got our latest data, which goes to April, shows that sales volumes are 20% below the 5-year average in Adelaide. So definitely well below average, but certainly not as bad as some other cities like Brisbane, where volumes are down 52%.
Okay, well, we've also started to realise that the number of properties actually on the market in South Australia's market's getting back a bit. It is still up on seasonal numbers, but it's back on the 2,000, back to about 1,600 last week. That's active listings as opposed to available properties. Now, we have a system where we treat the active properties as people really wanting to sell, where the sleepers are the ones on the websites which just sit there. Do you have any differentiation in those two categories?
We don't differentiate that, so we just take anything that's advertised for sale. But if we have a look across South Australia, we're seeing that new listings are actually at fairly similar levels to what they were at the same time last year. So that's where I said we're not seeing a big jump in new listings, but total listings are still quite elevated. But as you said, over the last couple of weeks, we have noticed a bit of a plateau and even a slight fall in the number of new listings, which is encouraging, but we need that to continue.
Now, will the first home buyers start to come back into the market, in your view, Cameron, given that the rents start to march on, providing, of course, interest rates don't go up?
I think over time they will. I think we'll probably still see fairly subdued numbers of first home buyers for much of the rest of the year. We know that consumers are very cautious. We saw the consumer confidence data which came out this week, which was very weak. People are continuing to save. They're not out there in the shops spending. So I think we'll probably see those potential first home buyers stay on the sidelines for much of this year. But if rents continue to grow, people will start doing their sums and thinking maybe I'm better off paying off my own mortgage rather than paying off someone else's. Certainly,
I think we'll see the investor activity increase with those rents going up as well. $25 billion wiped off the stock market yesterday, 20 the day before. Surely people must be thinking property again?
You'd have to think so. I mean, people are going to go away from those riskier investments on the stock market. I think the carbon tax has added to the uncertainty. So people may turn back to something they know and trust and has done well for them in the past, and that's certainly property. So I wouldn't be surprised to see it if we start getting a bit of an uplift in that investor activity in the coming months, especially if the yields continue to improve like they have been over the last few months.
Cameron, prices up or down over the next 6 months for Adelaide? Put your money on the line.
Look, I think you might see some further slight falls based on our value index that we release each month, and we've got data at the moment to May. Adelaide property values are down 2.6%, with houses faring worse than units. Units are actually fairly flat, and houses are down by about 3.2%. I wouldn't be surprised to maybe see a little bit further of a downward trend over the next couple of months, but I don't think we're going to see falls of any more than 5%. I think that's an absolute worst case scenario. So maybe a bit further to fall, but overall pretty flat over the next 6 to 12 months.
Now, just before you go, because I'm getting the wind up here, but I really want to get this out of you. Adelaide rises to 46th most expensive city for rentals, according to a survey that's in today's Advertiser paper, the local paper. Any news on that?
Well, I guess it comes back down to the money grab that all the governments are going for with the supply of new housing. We have a look at the value of vacant land and what people are paying there. Obviously, a lot of costs built into that, infrastructure charges, the cost to build new development, and I think Australian cities are quite unaffordable. Because we do have such high land prices, and governments at all levels need to get serious about it and stop trying to take a cash grab every time someone needs to develop a new block. We need more housing, and we need more housing to be at affordable levels that everyone can afford. And
of course, the Australian dollar's impacted on that affordability as well.
Exactly right. Anyone coming from the US or Europe certainly is not getting the same bang for the buck as they're used to.
Cameron, great to speak to you, and we'll catch up with you again in a month or so.
Thanks, Anthony.
Now let's off to SA's finest and look at some of these magic properties that we have.